In the last couple of years, the UK property market has been very dynamic, with historically low interest rates sending house prices through the roof. People who wanted to buy a home, but also those investors, were betting on the market to continue to rise. But we saw the economy take a dark turn. Inflation skyrocketed, but those interest rates shot up by 500%. Given this interest rate shock in an already overvalued housing market, a lot of people were asking, why has the housing market not crashed? In this video, I want to share with you the current UK property market, the surge in rental prices, but also the hottest topic, which is politics. Stay tuned. Most recently, we had the Bank of England holding interest rates at 5.25%, and experts such as Sarah Cole saying that it's unlikely to have any cuts up to around about August or September. Act Now for Mortgages advises securing mortgage deals now, as significant rate drops are very unlikely. At the beginning of the year, we were expecting some cuts from the Bank of England around about the June time. However, with the election, we all knew again that it was very unlikely it was going to happen until after the election. So no surprise there. The latest data from Nationwide shows house prices increased by 0.4%. This is following a 2-month decline, ever so slightly. Now, what happens during these times, whether we look at Brexit or the pandemic or even inflation going up so high, is whenever there is a shift in the market, buyers and sellers, it takes them a bit of time to actually find what true market value is. And I think we're reaching that point now as we get to the middle of the year. We ended last year quite negatively when it comes to the housing market. However, at the beginning of 2024, there was a lot of optimism, especially around mortgage rates, kind of already knowing that had peaked last year. But now that optimism is now stabilizing. Last month's growth was modest but notable. Zoopla reports flat growth, while Halifax shows a slight decrease of 0.1%. Now, this modest growth is happening despite many experts painting a negative picture of 2024. Many of you who follow my channel know that property is hyperlocal. And if we look at London, specifically prime London, and the reports coming out from Landlords, we can see that 50% of properties that have sold in 2024 so far in prime London have had a price cut. So more property listings on the market and price cuts seem to be becoming the norm. However, if you're a buyer out there watching this, don't get overexcited. They are very modest. Let's look at the historical comparison, which is 47% of properties had a price reduction between 2017 and 2019. This dropped to 40% in 2022 and rose again to 48% in 2024. So the big question is, why have house prices not crashed in the UK? And there are several reasons for that. Number one is there is a limited stock of properties, and it's been a housing crisis for many years, which the government still hasn't addressed properly. Also, there is still a lot of demand, whether that's overseas buyers, but also investors. Let's not forget that rent have increased substantially. So those who do have cash, that don't have to rely on finance with a very high interest, they continue to buy properties for investment. And you have those big institutions, especially when it comes to build to rent. The economic recovery, improvements in the economy, as I said, inflation has fallen and there is currently low unemployment. Steady employment rates help maintain consumer confidence and purchasing power. Whilst interest rates haven't fallen to the rates that most buyers would like to, there's a lot of confidence out there that it's reached its peak last year, it's stable at the moment, and we can see cuts pretty much in the next few months. One other thing that's important as well, because at the very beginning of all this inflation and interest rates going up a couple of years ago, a lot of people comparing the market to the financial crisis of 2008, 2009. And it is a different market when we look at homeowners and investors. Back then, there were a few things that were different. First of all, there were less people and investors that owned their property outright. Number two, people who did have finance had it on a variable. So as soon as those interest rates shifted, they were in trouble. At the moment, a lot of people have it fixed. Fair enough, a lot of people came off those fixed rates in the last couple of years and even coming on to the next few months, but there was some type of safety net there. And the biggest difference we'll see is the stress test done by lenders now in comparison. So we're going to see less people in trouble than we saw back in 2009. So all these factors collectively have prevented a significant drop in house prices in the UK for this year. And this is my interpretation of the UK property market based on data, but I am curious. Do you think there's going to be a property crash? Leave me a comment below, let me know your views. This leads us into the rental market, and I'm seeing some very interesting data from HomeTrack, which points out that UK rental inflation slowed to 6.6%. Now, this is the lowest rate in 30 months. Now, some of you who have been following our channel will see that the increase in rents has been consistent, around about double digits every year for around about 3 years, around about 30% almost in some parts of London. So for a lot of renters out there, I'm sure that this is going to give somewhat some peace of mind. And London leads the slowdown at 3.7% over the course of the last 12 months. There is no surprise there. If you watch back our videos, you will see that we had predicted that London was going to have probably the slowest over the course of this year. We predicted it was going to be around about 2%. There are other cities and other regions that perhaps didn't have such a huge increase, and there's still room for growth. Rental demand down by 25%. However, if we look at pre-pandemic levels, we can see it actually continues to be double in comparison. Now, when we look at rental homes available, it is up by 18%. However, still a third lower compared to pre-pandemic again. And although there is some evidence of rent falling, at least when looking over the last quarter, one thing I know, especially with cities like London, this is the calm before the storm, especially as we head into the summer months. We get a lot of students coming, of course, so many universities here in the city, and they do compete aggressively against working professionals, but also working professionals coming from overseas and being relocated. It happens every year, and it's something to watch over the course of the next few weeks. Why the surge in UK rental prices? Well, there are different factors that contribute to this. First of all, let's look at the demand side of things. Now, more people looking to live in urban cities. We know that at the moment, half of the world population actually live in urban areas, and that's set to increase over the course, continue to increase over the course of the next 20 years. Number one. Also just migration, so people moving from other countries into the UK. We know that that's a fact, and that continues to increase. It's good for the economy, whether you agree or you don't agree. That is a fact that's happening right now. Young people change in preference as well. Now, there's two factors driving this. Of course, affordability is one. If you look at the mortgage rate, you know, it's very high, as you already know. But secondly, to get a deposit, a lot of young people are struggling. But also the mindset change. They've also just come to a conclusion that actually it makes more sense for them to rent than to buy. It helps them move around, which is the other factor. So there's a lot of remote working, whether it's here in the UK and other areas, or going across to different parts of the world. Now, it doesn't mean that these young people aren't investing in property. They're just not investing in the property that's their home. So that's a big factor that has changed. And yet if we look at the supply side, we know that the government hasn't kept their promises in providing more housing. So there's a shortage of properties, and of course that trickles down onto the rent. Secondly is the policies that the UK government have been introducing and continue to introduce, have been putting a lot of buy-to-let investors off and been coming away from the market, which again impacts the supply of properties, and inflation, which has skyrocketed. So all of these factors collectively have contributed to rent price in the UK going up. There is some stabilisation, but it remains to be seen.